The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We'll have Rich Anderson as our guest today at 9:30. We have a big crop report due tomorrow, Tuesday, and so that'll be interesting to see what his prognostication is for that. And also tomorrow we will have Norman, who calls it to the minute. Winsky will be our guest. We've got that new moon coming in, and I think he'll be interested in telling us more of what he sees, because his timing has been, pretty good. Folks, we have a really interesting bunch of patterns. Those of you that get the 24/7 newsletter, I posted the ones for the FTSE. I posted the ones for the DAX. You'll see the DAX has made a very large three-drive to a top pattern. But, folks, we're seeing these patterns all across the board in the indices. The only one that is actually off by a little bit, and that is the Russell. All of the others are just absolutely just unbelievable. Look at this in the Dow Jones and industrial average. Now, I was so shocked. If you remember on the Friday show, early in the morning, I said our sell point in the S&P was at 38.23 with an 8-point stop, and that got filled right on the end of the day. It rallied, I think it rallied 25 points to get up there. And I was shocked it even got filled. But anyway, here we had to sit overnight with that. And the game plan was if it opened higher Sunday night, you're out. That's basically how it worked. So far, it went the other way, which is the way we were expecting. But if you look at this Dow Jones industrial chart over the past, year, pretty much, from March to February, you can see the two 1.618 expansions there. Folks, that comes into the exact number. I believe it was off by 2 ticks, 6 ticks, for 31,982 or something like that. 31,198 was the number, and I think it got to 96.5 or something like that. I mean, it was so accurate. I blew my mind that I saw that. We saw the same thing in the S&P. It did exactly the same thing. Just, the absolute perfect number, and you don't see that very often. And that's why I think that this means something. And when you're seeing it across all the other, hold on just a second here. You can see here, to get this up here for you. 1 second. There you go. You can see that same thing in the S&P, that we had another 1.618 up there. That's why we were looking for it at the level of 38.23. Now, whether that's going to mean anything is, like I said, we'll have to just wait and see a little bit at a time. That's really what the game plan is here right now. These patterns, they only work part of the time, but when they do work, they work pretty well. So that's what we're looking at. Now, a couple of really important things happened last night from our perspective of whether the market is really bearish or not. I'll bring this up to you to show you where we were. This is the whole action last night, starting at the Sunday open. You notice we gapped down. We tried to fill the gap, and then we made a nice 382 retracement in the middle of the morning here at about 3:30 in the morning. As a 382 retracement, we've now broken that to the downside. And if you do the old Tom Hugard wiggle, where you sell more, he would have sold more at the 382 and then sold more when it broke 37.92. And the profit objective on this for today is 37.60. Frog in my throat. Oh, sorry, folks. The target on this one is 37.66. That's a move down from 38.24.5 down to the bottom there at 37.90. That's 26 handles. We rallied up. We rallied 14 points right to the 382. You subtract that 36 from that level, and it's going to take you right to 66. Right, pretty much right on the money. Now, there'll be some rallies in between, I would imagine. So if it's bearish, you'll get some pretty good rallies. The other thing that could happen this morning, folks, when this market opens, we could just literally take off. And if we get above 38.06, then something's certainly wrong. And these patterns are not going to work. So 38.06 is what you want to be watching. Now, someone asked me over the weekend. They were concerned about being short the thing over the weekend. I said, hey, I have no control over that. I don't know the fundamentals or stuff. I just put the orders in. Sometimes they work, sometimes they don't. And I said, just relax. I said, and he said, oh, the news is so bearish. I said, dude, the news has been bearish since March 23rd. So who knows what's going to happen? So that news is not really important. That leads me to the second phone call that I got over the weekend from one of our 24/7 folks, and he was saying that, gee, I'm doing really good, the last couple of years, but I still have a big problem. And I said, okay. I said, what is it? And he said, well, I'm in the Tiger's Den, and I see what these smart guys are doing, and sometimes I want to do the exact opposite of what they're doing. And he said, Larry, he said, that includes you too. And I said, well, you should. I said, because I'm only right about 60% of the time. So I said, you just got to follow your own heart. I said, you've really studied the markets now. You know what you're doing. You know how you're doing it. You have to pick the time frame that you want to trade. All those things come into it. And but he said, these guys are so smart in the den. I said, yeah, they are smart. But even then they make mistakes. They really do. And they tell you about them. Look, Mr. Z tells you all about it all the time. So it's not that difficult. So you have to take that responsibility on yourself to say, this is what I have. And Duffy just posted there, focus on whatever works for you. You flat out got that right, Duffy. You could make a quote that and sell it on a plastic platter. Yeah, but and then Jimmy D comes on, but Jimmy D says, don't fade Z, and I will go to that, to the second motion and the third motion and the fourth motion. Mr. Z is where it is, and what it is what it shall be, and what it can be is what it will be. So don't fade Mr. Z. This guy is pretty good. I know he's just doing really good. Every time you take a trade, there's always someone smarter taking the other side. Yeah, that's probably true. You just never know. And remember, this is not like, see, Bitcoin, they don't have short selling in Bitcoin, folks. So when you're seeing all that stuff that's going on in Bitcoin, I mean, that's just, hold on just a second. I've got these allergies this morning, so bear with me a second. I want to bring, oh dear. Okay, sorry, folks. Chart to show you a parabolic chart, folks. The difference is this is a arithmetic chart. It's not a log chart, and if you would do it on a log chart, you'd see that this is really not anywhere near this type of a big move. In other words, we went from 20,000 to 40,000. In a matter of a couple of days. I believe we did it in 5 or 6 days. And now we're swinging around here 8,000 points at a time today. That's normal. We're going to have, many players are coming into the market. Yeah, I'm going to take a little break here. I'm going to break a little early so I can get some medication here. I'll be right back, folks, right after the break.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I wanted to post a chart of the New York Stock Exchange Index on a weekly basis because it's got some nice cycles in here, plus the fact it's making a nice 1.27 expansion. As you can see here, the January time frame has always been, since 2018, we had a high 2019, 2020, and I don't know if this is going to be this year or not, but 2021, here we are in January with a completed pattern. But the pattern's completed in just about everything. The only one that actually exceeded the patterns that we were watching was the Russell Index. That's the one, the Russell 2000. And the only thing that I could see that was bearish in that Russell 2000 was the fact over the past 3 weeks we've made that ABCD pattern up here at 2098. But remember, there's a 1.618 expansion up there at 2162. So if we make a new high today, then that would tell us we're probably going to go higher. Regarding the Bitcoin, folks, you can't short Bitcoin because in order to short selling is related to stocks. In other words, in order to sell a stock that you don't own, it has to be borrowed. That's through the brokerage firms. And since these are on different exchanges, they're not stocks. The Bitcoin happens to be a coin, whereas, Ethereum happens to be a token. So those are different things, so they're related to the cryptocurrency stuff, which I don't understand. In fact, I shouldn't even be talking anything about it. But I know you can't do that, but you can do. I think you can do it at the CME Bitcoin because that is a futures contract, and a futures contract for every buyer, you have to have a seller. So you can go short Bitcoin by using the CME futures, and the open interest on that is right around the 11,000 area. Now it's taken a good 2 years to get to that 11,000 level. We stayed at about 4,000 open interest for just about a year, and then recently, this past year, during 2020, it started to pick up. So it's a legitimate thing, and they're moving it around quite a bit. I do not believe this is the high in Bitcoin, even though we've had an 8 to 10,000. We sold off $10,000. It sounds like a lot per coin here in just 3 days, Saturday, Sunday, and Monday. And remember, they trade that thing all all day Saturday and Sunday. That's when you see a lot of your volume, when people are at home from work and they're in there doing it. But that's neither here nor there. But we did have the value of the Bitcoin match the value of Facebook as of Friday when it hit 42,709 billion or something, whatever it was, trillion, zillion, quadrillion. I don't even know the numbers anymore. They're so doggone big. So keep those things in mind as you're looking at some of those things. So that's the main thing. Someone just asked the question, do I think this is the top in the stock market? Folks, I have no clue. I really don't. All I know is there's a tradable pattern. That's really all I know. And I don't try to, be a prognosticator of saying this is the bottom or this is the top. I mean, I'll do it in some futures market that I think I know what I'm talking about. But with this one, it's been so doggone strong. It's just a beautiful traded pattern. I mean, it's a 3 drive to a top pattern and a 1.618. It might not work, but my gosh, that's your when you're at 1.618, if you go above it, you're flat out wrong. You remember the copper? We went through that whole thing in copper, all the resistance that we had in copper at the 366. Well, that puppy went to 373. So, these things fail, and that's the main thing. Now, oh boy, hold on one second here, folks. Let me get this up here in just 1 minute. This is a chart from one of our listeners over in Hawaii. Let me get this up here. And I wanted to bring this to your attention because this is something that we've been watching here for quite a while. We've been saying for a long time here, well over a year, that we didn't think that deal on the, what do you call that thing, negative interest rates, was going to mean anything. And certainly I don't think that's going to be the case right now. Right now, the Treasury notes are hanging on by their fingernails, trying to even keep the long-term trend intact, because we're having a pretty good correction now that started, way back in July, and now we're starting to accelerate, breaking all support now. We broke all the support over the last year and a half, and the target down there is at 134. We're at 136 right now, so these things are looking like they're going to go lower, and as they should, because if the Fed is going to start printing money, to pay for all these things, $50,000, they're going to deduct $50,000 for college loans. That's going to be taken out, and then they're going to be giving money away for just about everything, I guess. So hopefully we'll all get a little bit, so when we have to pay it back, it won't be as bad. But anyway, we're going to be printing money for quite some time. So we haven't seen the inflation yet, folks. We've seen a little bit here in the grain markets, of course, but the rest of it, we haven't seen it. But I do believe it's coming. If we keep pumping in money like this, it's amazing. I mean, over the last few years, we went from 2008, we went from 2 trillion to 22 trillion, and then 2016 to 2000 and where we are now, 2021. Those 4 years, we added another $5 trillion. A trillion here, a trillion there. Pretty soon, you're talking about serious money. So that's one of the reasons why I'm a technician, folks, because I don't understand a lot of this. And I've got degrees behind me. I should be a lot smarter than I should be, I guess. But when I look at these things, how the market reacts to some of this stuff, it's amazing. Remember on March 23rd, Larry Williams came out with this tremendous. He said, "This is the strongest buy I can possibly have," on March the 23rd. I mean, we talked about that. I just took antihistamine at the break here, David, so I'm going to be okay in just a few minutes. Part of it is, when I start talking, I talk through, when I have a nasal drip or whatever it happens to be. I'm not a professional speaker, as you might guess, but it's a little difficult sometimes when you start talking and then you can't breathe, and that makes it a little more difficult, because breathing is very important, boys and girls. Getting back to what we were talking about, when you're looking at, hold on one second. Okay. All right. When you're looking at markets that you don't understand, you can still trade them, because you'll have to know what's going on just by looking at the chart. Just by looking at the chart, you can see that we've had a lot of volatility in, in what's going on here this morning in Bitcoin. Starting, Saturday, started Saturday, Sunday, and then now we're having some wild swings, 10,000 swings. Now, the key to Bitcoin is if Bitcoin should fall below 15,000, and it's hard to believe 15,000 per coin. You're saying that, but that's what it is. If we get below 15,000, that would be the first sign that there's something wrong. And believe me, folks, there is a possibility this thing could be just smoking mirrors, because this can be shut down by the U.S. or China or wherever they want to. They can shut down the internet. I know that's a lot of commerce, but that's a possibility that can happen. But who knows? The way things are going now, I never thought that's what I'd say, see the day that I'm seeing now, but that's the way it is. Okay, we'll have take a break here. We'll have Rich Anderson at the break, hopefully, 877-927-6648.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're talking, I believe, with Rich Anderson out of Minneapolis, Minnesota. Rich, are you there?
You bet. Good morning, Larry. How are you?
Good morning, Rich. We have the posted chart here of the March soybeans up here trading at 13.82, and they're still basically up overnight for some type of a weather market or something. But what's your feeling on soybeans up here, beans in the teens, Rich?
Well, once they got above 12, they seem to accelerate. I think they're getting fully priced, but the things that are going on, first of all, they have the crop report tomorrow, and that's gonna be a thing that could accelerate it again, or put the high in for a while. Mm-hmm. The commitment of trades report didn't show the funds as long as people had thought, and that's why the beans showed some strength this morning. There was some rain over the weekend in South America. That's one of the weakness things, but this report in January is one of the big reports of the year in any year, but this year especially, it's going to be a big deal. So, we've gone from last year, we were as oversold as we'd been as far as negativity since 2003, 2001, and now we're as overbought as far as optimism as we've been saying since 2012. But we still have issues. We have to ration this crop. The range of guesses for tomorrow is rather wide. When these reports come out, they'll come out at 12 o'clock Eastern Standard Time tomorrow. The algos can change orders faster than you or I can blink. And so you really almost have to let the dust settle in that first 5 minutes, because the numbers hit up, the algo sees that number. And that's why, by the way, that's why you have, often have spike up and then spike down. As these numbers get written onto the tape, the algos can read them the fastest, and they're putting orders in. And then let's say it's U.S. orders numbers, and they see something that's bullish in one of their numbers based on their programming, and that pops the market. And then they see something bearish based on a world number, and that pops the market the other way. You can't react to that. So I'm a spectator for 5 to 10 minutes and let the dust settle. But we're getting up there. We still have to buy acreage. After this report's out, they revised, they resurveyed some of the 2020 production area, and the range of guesses on this stuff is relatively wide. I think we're getting fully priced, for the moment, but we still have to buy acres, and then we have to have a good weather in this country. So that'll be the thing starting in March. It's going to be a very interesting year, and the thing you have to keep in mind is the dollar, and look how much the yields changed last week, and that may put a low in the dollar temporarily. Everybody anticipated that, interest rates will stay down here forever, and all of a sudden they spiked last week. Now, that's not much of a change interest rate-wise, but as a percentage, it was quite a big change in quite a short period of time. So that's something to keep an eye on.
Yeah. Rich, we have a lot of different reports come out on these grains. Do you have a way of telling the folks a simple, quick and dirty way of looking at which reports are more important than others?
Well, you can go to Reuters or Bloomberg, and they all have estimates of what the guys are looking for. We got the surprise in August when they adjusted one of their reports from the last couple of years. Every time a report comes out, they look for where can the surprise be, but the range of guesses is so wide that the surprises are probably built into this report. But that August report, that was an anomaly. This is a big report. These numbers are big. The thing I think that I keep focusing on is that we actually had people go to grocery stores when the shelves were empty, and countries cannot allow the shelves to be empty. So Argentina canceled exports of corn, and then the farmers protested. So today they've decided, we'll allow so many exports per week, because otherwise our farmers will get mad and they won't sell anything. But countries cannot allow for the shelves to be empty And so they're trying to manage their supplies of corn and soybean, and they've seen what can happen. That's why Russia, Argentina, all these countries are being careful to make sure that their domestic prices don't get too crazy. I mean, overnight, Chinese soybeans were up 99 cents.
$1 a bushel.
You know, that's probably somebody out of position trying to cover before tomorrow's report.
Wow. Now, Rich, on these algo trading, I want to get back to those reports in a minute, but on the algo trading, those are all automatic, aren't they? All computer generated stuff.
Yeah, it's computerized. Everything's computerized, and literally they can change orders faster than you can blink. So there's no way we can compete against that. You've got to find the playing field where you can compete. That isn't it. If you want to take positions prior to this report, you can do back spreads in options. You know, you could, if you wanted to be bullish, you sell one call and then buy 2 higher strike price calls. Then if you're wrong, you know what your risk is if the market goes down. And if it runs and it goes straight up, you're going to have about a 30 delta on the long side with limited risk. But otherwise, I don't see how you play these reports, and especially in that. Once they're just vacuums in the, there are vacuums in the order deck because there are no order decks anymore. It's not a pit; it's all electronic. So these computers can put the orders in and cancel them, and so you have air pockets where there are no orders. So even if you have a stop in, that doesn't mean anything if there's no air. If there's an air pocket and there's no orders there, your stop could get filled real poorly, or the CME has a rule that stops can only be run by X amount, and so you could theoretically think you were getting stopped out and then not. So tomorrow's a big report. That's the key thing. Okay, now which report is this? Is supply demand tomorrow? It's a supply and demand, World Agricultural Supply and Demand estimate, and it does the final crop report of the corn and beans in the United States. The carryover stocks is the focus thing, because we have a pipeline. Take the pipeline of soybeans. The pipeline of soybeans is probably 130 million bushels. Well, they could lower the carryover tomorrow to pipeline, and it's pretty hard to have the carryover pipeline. And then when they're calculating these reports, how much of what's in transit are they counting as stocks? I mean, there are multiple ways that they can massage the numbers. And so the markets react. The markets have an expectation. Then the markets get the number, and they're either excited about or disappointed by what the number is versus expectations. And that causes all these reactions. And there's the U.S. numbers, and then there's the world numbers. And so you can pop it one way on one number and another on the world number.
Hey, can you stay with us for another segment, Rich?
Sure. No problem.
Thank you. We'll be right back, folks. Rich Anderson.
Hi folks, this is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The gold report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The gold report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The gold report comes with a 30-day money-back guarantee. Go to TFNN.com and order the gold report now. Protect your buying power. Order the gold report now.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi folks, this is Tom O'Brien. Are you looking to buy or sell gold, silver, platinum, coins, or bullion? We can help. At Tiger Precious Metals and Stones, we specialize in the buying and selling of gold, silver, as well as collectible U.S. and foreign coins. We not only buy your unwanted or broken jewelry, but you can trade that in for gold and silver coins too. Call Andy now at 727-329-8245 for a quote over the phone and to lock in the current market price. Call us now at 727-329-8245.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, folks, we're back. We're chatting with Rich Anderson, Anderson Capital Management. Rich, we have a question from one of our listeners about the velocity of money. Rich, when we first started knowing each other way back in the 70s, we had that M1 and M2 that we followed all the time. Starting at about 1973, 74, but nobody even follows that anymore. What do you use to determine what the velocity of money is, Richard? Do you still watch it at all?
Well, I mean, you still have to watch it. That's the reason the Fed hasn't been able to stimulate the economy more than expected, because the money hasn't gone into the economy. It's gone into, assets. Into real estate, or right now it's been going into the stock market.
Sure.
But if people start spending the money and you get that velocity of money, that's when the economy really starts to grow. But people, back in March and April of last year, people started to save like crazy because they're worried that, I might lose my job and I've got to have some money so I can pay for things later on. And then, of course, they came out with lots of help. But what did the money that lots of help went into? It went into chasing the market on the upside. And the stock market went up like crazy. Real estate in like Florida started getting very strong as people wanted to move out of New York, because high density areas, you want to get a little less, you want to get a house instead of an apartment. So if that was going in the economy, if people are going to restaurants to eat, when we get back into recovery and you're going out to eat and you're buying a steak or whatever, that'll have a big impact on the velocity of money. But the savings rate went up and went into the stock market. So there was, they couldn't push, you can't push a rope. And that's kind of what was happening. They were trying to push a rope, throw a lot of money into the system. I mean, they put more money in the system in 1 week than they did in the 2008 financial crisis.
Wow.
It's unbelievable.
Yeah, that really is.
And we'll eventually find out what the unintended consequences of that were. Mm-hmm. For now, it's been a weak dollar up until last week when the yields shot up. And as a percentage move, in the amount of time they moved, that was a big deal last week. It's just a little blip on the chart, but percentage-wise, it's a big deal. We're in momentum markets. Markets go through a high or something, and they just run. Then they go on to the next hot thing. And sometimes they're going on things that have value, and some things they're going on things that just have a story and probably don't have any value. So you have to be careful.
Yeah. Rich, we have a question from one of our listeners about the hog market. I just posted a chart of February hogs. Looks like we've had some type of a double top up here at about $72 per pound. What's your feeling here on the livestock, both cattle and hogs, here over the next month or so?
Over the next month or so, there's been an increase in the virus. That's going to slow down any going out to eat and stuff like that. So I don't see much. But eventually, if we get enough vaccinations, if we get enough people going back out, and restaurants are allowed to open, and the entertainment the travel and entertainment lost 500,000 jobs in the jobs report last week. Eventually, that's going to come back, and everybody will start spending money, and they'll be buying steaks, and the pork will take off. People had thought that the hogs would take off over the last 12 months by China buying a bunch, but their hogs are now back online. They've repopulated, so we're not necessarily going to get a big buy from them unless the dollar continues to get cheaper. Every time the dollar gets cheaper, it makes all of our commodities cheaper. And then, and the other thing is, as of the first of the year, we've got asset allocation in the commodities that we haven't seen since 2012. So, there's a bid under the market for everything from platinum to you name it. Oil, in the fracking has been the swing producer over the last 3 or 4 years. Well, there has been no capital allocation to the fracking industry because, it got in deep trouble when the oil prices went negative. Our U.S. production is going to go down. That's going to keep the oil prices strong. The Arabs know that. That'll help the corn from the ethanol grind eventually. It isn't right now because people are shutting back down. There's gradual changes that are going to occur this year, hopefully, if we're successful in our vaccinations. But for now, the economy is having another slowdown. And then let's say it does start to improve. Well, then we'll be comparing us against months where we had shutdown like March, April, and inflation will look like it's going like crazy. So it's going to be a very volatile and interesting year. And the reports after this report, the next grain report will be: are we buying enough acres of corn and enough acres of beans? In March, the Chinese will shift all their buying down to Brazil because that's when the beans will become available down there. There's a lot of interesting things going on this year. It's going to make for some wild swings. I think you look at the technicals and take your positions accordingly and control your risk.
Wow, this is really exciting stuff that's going on here.
It is.
Rich, we have one other final question here, and what is your feeling on the gold market?
The gold's an interesting one. If, the Bitcoin, which I know nothing about, but has gone vertical, I think if Bitcoin weren't around, the gold would be going up like crazy. I think gold has value down in here. I'm not talking my book. I don't have a position in it. It may very well retest last year's lows. The market seems to like to do that. They seem to like to retest, but I suspect it's likely to hold in here and getting back up above 1855, 1860. 1856 was this week's high, so getting back above that. And I think we're likely to break out, and eventually we'll get above the 1977 and retest last year's highs, and maybe even go higher, because you can't create all this money. There's just been so much money printed, and they don't want to make the stock market go down. Look what happened in 2018 when all of a sudden the Fed said, well, we're going to let some of these bonds run off. The stock market broke like crazy. So they're going to have to figure out a way to slow this train down. Initially coming in, the Biden administration is probably going to try for $1 billion stimulus package, and that'll give us the move to new highs in the stocks and probably light a fire under the gold. So I think if gold gets back up above 1857, it's going to be headed back to test last week's highs at least 1900. But if the stimulus comes out, it'll be testing last year's highs too. So, it probably has value down in here. Figure out how you want to, control your risk. That's the key thing. Yeah. Control your risk. Disciplined trader.
Yep. Hey, listen, my friend, thank you very much for joining us. We'll have you on again, and may God bless and stay safe.
You bet. Thanks, Larry. Have a great day. Trade well.
You bet. Rich Anderson, folks, Anderson Capital Management. If you have any questions, 877-927-6648. One of the questions someone asked, is Rich involved with the cryptocurrencies? No, he is not. But well, let's just move on to the next section here. We'll be right back after the break, boys and girls.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I posted the chart of the U.S. dollar index. We had that ABCD formation down there last Thursday. We've had a pretty good rally. It's continued on above the 61% retracement level, which is a positive sign for the dollar. That D level could be a very, very important bottom. But if you'll remember, this thing has broken really hard from the 95.5 level all the way down to below 90. So this is something that is not, it just doesn't happen very often. So it's going to make an irregular bottom. In other words, I don't think this is the bottom, that it still might make another bottom in here, but it hasn't done it as of yet. Regarding the stock market, folks, with a bunch of patterns up there at that 38.23 level in the S&P, and at 11,000, and I forget what the number was in the NASDAQ, and also in the Dow Jones. 31,100 and change, right on the money. They were all three drive to a top patterns. That's just a pattern, folks. It could last a long time. It could last 2 days. It might be done by the end of the day. We don't know. So if you're in those things, put your stops at break even and let it rip and see what happens, because we don't know what the future is going to lie. We got a lot of things happening in the news every day, and you don't know what to believe. I mean, some of the stuff that people sent me over the weekend was so unbelievable that I literally thought I was going to send it in to one of the famous comedians like Seinfeld and make a joke out of some of this stuff, because it was really wild. Anyway, let's move on here and keep an eye on the crude oil, because I think we've made a pretty significant top up there. The crude it will be told this week, because if we close lower this week in the crude oil, that will definitely confirm that it was the spot where we probably got stopped out on the high day, but that happens all the time. But this should be the spot. We'll be looking for another place to re-enter that. So the British pound continues to work lower. We've been bearish that for quite some time, and we still think that's going lower. And stocks should be going lower, but we're going to have a lot of volatility with all the stuff that's going on. I mean, it's a news event from one to the other, and how these things react to it, one doesn't know. So we'll see you on the flip side tomorrow, folks, with Norm Winsky.